Hi, folks. It's Hal Feldman. I'm here for the MiamiHal Real Estate Show, and I've got a great guest. We're going to be talking about mortgages. And you know what? I've been working with this guy for many, many years, and I'm finally going to pronounce his name exactly right. David Demarchena.
Demarchena. Yep.
Demarchena.
You'll get it one
Almost. This is how nice you are. You'll actually let me mispronounce your name and continue with business, right?
Mm-hmm.
Okay. Well, anyway, we're going to really be talking all about mortgages, and not in the way you'd expect. This is going to be very conversational. And I remind everybody that's tuning in, your questions are just as important as what we're planning on talking about. So please, if you have a question or a comment, we'd love to see them. Tommy will let us know if there's something up there. And in the meantime, David, you are with Cross Country Mortgage.
Yes.
And so one of the things I always tell my clients is that mortgages obviously are a competitive business. They can go to X, Y, or Z, but there is a reason why to go to you in particular and Cross Country Mortgage. I'll start off a little bit in the conversation, and that is, right now we're living in unprecedented times, and I'm not talking about COVID in this case. I'm talking about the fact that interest rates are like giving money away, right?
Absolutely.
So generically, talk to me about the type of people and the situations that you're in because the interest rates are as low as they are.
So the type of people that we're dealing with on a daily basis. So mainly we do FHA and conventional loans. It's a lot of first-time home buyers that we're dealing with.
That's the key, right?
Yeah.
First-time home buyers all of a sudden have the buying power that they didn't have necessarily before.
Absolutely.
And so they're lining up, right?
Yeah, and that's something sometimes they don't realize right away until we educate them on it. That's why sometimes having an initial meeting, whether you're considering buying a home now or maybe a year from now, just to know what your buying power is, right? Because rates are so low right now that a home, let's say a year ago or 2 years ago, at a $300,000 home at a 4% interest rate, you get a house now at $350,000 with a 2.9% interest rate, and the monthly payment may be cheaper. Thus, you have more buying power because the rates are so low right now. So it's really a good time to take advantage of those rates.
And I'm seeing it clearly in the number of people that are out there buying, typically in the moderate price ranges, where there's really seems to be a bubble at this point. Before I would show, X amount of times a month to somebody that's a first-time home buyer, and that's at least 2X now. And when my clients do finally find the home that they want to purchase and they go to get a mortgage, things are potentially taking longer to run through that mortgage process. So again,
most definitely.
Let's, educate our audience a little bit about what the mortgage business really is. David is an excellent person to go see for a loan. And your official title is what? Because I want to take the title and then boil it down to what it really means.
Yeah. So I'm a originating branch manager.
Okay. So you are a branch manager, and it is you that would be the customer facing person that you take in their information. You say, yes, we can provide you a loan, and here are some options as to what type of loan you are qualified for. And throughout the entire process, the customer is talking to you solely, but you are just, an iceberg. You're the stuff that's above the water surface. What's underneath your process as people are going through a loan? What people are involved underneath at a very surface level?
Yeah.
At a very below surface level. Please tell us who those people are.
So I'm your upfront contact. So I'll give you some loan options and see kind of what fits your scenario. But after that, we have a team of loan openers that are going to order your appraisal. They're going to verify your employment. They're going to order title work. And we also going to have processors and underwriters who are going to be the ones that kind of structure the mess I may have given them, the hundreds of pages, put it in a nice little tight package with a pretty bow on it, and send that to the underwriters, who I consider basically like a judge, who will be the person that gives the final answer on whether your loan's going to be approved or not.
Got it.
So I'm just a beginning point. There's so many other people involved.
Would you say that's 3 other people, 12 other people? Approximately how many people are behind the scenes that a client, a customer never sees?
Probably, I mean, if you include inspectors as well, probably between 8 to 12
Okay. So
on each
you
file.
are essentially not only a branch manager, you're the manager of the loan itself,
Yes.
and making sure that those 12 people, or approximately 12 people, are interacting and doing things in the right order to get things done.
Yeah, we make sure there's a system in place so communication stays on point throughout the transaction and we could close on time.
All right. So for those of you out there that are thinking about purchasing a home, refinancing, doing something where you need a mortgage, the first thing you need to understand is the person that you're going to interact with is the ringleader to assist you. And what I also have to explain to buyers, in particular first-time buyers, is, and I mean this in a lighthearted way, when you deal with a mortgage company, you are not going to be necessarily happy with them by the time you get to the closing table. And I don't mean you're going to be angry. I simply mean that they are going to run you through a process where you're going to have to deliver tons of information to them, sometimes 2 or 3 times. And so people tend to get frustrated with the lender. And unfortunately, seeing as how you're the person that they see, they're going to get frustrated potentially with you. I want to understand, is there a reason why you need to ask for their employment information, and how does that trickle down into the process of them actually getting the money on closing day?
Great question. So there's a couple things I want to answer to that. So the way I consider us is almost how you would compare hiring a lawyer and having a case which a judge is going to review. So the loan officer is somewhat a lawyer. So I'm going to take your case and I know what the underwriter, who I compare to a judge, will ask for. So my job is to compile all the data, get all the information accurately, and present a good file to the underwriter, who again is a judge, who is going to accept your file. So if I know that a underwriter is going to ask for A, B, and C and 20 pages of bank statements, I'm going to ask you for that up front. Why? Because even if you don't want to provide it up front and you may say, David, it's a lot of paperwork, once that file goes to underwriting and they turn it back and they then say, hey, I need this, then we may have wasted 2 weeks and your file may now delay 2 weeks to close, or maybe you're already out of contract, right? So you hire me to make sure that I close your file on time, right? Just how you hire a lawyer to make sure you win your case. So if a lawyer tells you, hey, I need you to say this, I need you to provide me this, they're saying that based off experience, what they see that the judges are going to ask for. And in my case, what I know the underwriter is going to ask for. So believe me, I would love to give everyone a loan and have the least amount of paperwork as possible. But I know under our FHA and conventional loans, which are the main first-time home buyer loans, there's certain regulations and requirements and guidelines that must be met. So we provide those documents up front.
Okay. And I want to go back to the beginning of our conversation where I said, listen, people that want to get a mortgage, they have a choice. They can go to, institution A, lender B, cross-country mortgage, and, somebody D, right? But there's a difference in cross-country mortgage. And I'd like to start off what I believe the differences are and then have you add on to that. So there are national lenders that some of them have apps, and I won't mention a name like Rocket Mortgage. Oh, did I just do that? Where they say it's as easy as clicking a button. And that really oversimplifies the process. And it's not fair to the consumer that's hearing that as an advertisement, because they don't understand what the mortgage process really is and how impossible it is for it to literally be click a button and get mortgage. And the same thing kind of goes for the large banks out there. And I won't mention names there either, but there are large national banks. And they also will simplify what they tell their customers and say, oh yeah, we're going to give you a mortgage at 2.6% and you're good to go. Well, what does that mean? And so I believe the difference with cross-country mortgages is twofold. One, you are truly local. And the national banks and the national lenders, like you have apps for, don't understand the idiosyncrasies and the details that are required to properly get somebody from a mortgage application to the money showing up at closing in in this area of town, right?
Mm-hmm.
In South Florida, it's different. And so somebody that is, their business is based in Peoria, Illinois, and they're giving out national mortgages, they don't get how to do this properly. The second thing that I believe is very different at cross-country mortgage is the personal attention that you not only provide to the agents that you're working with, but to the clients that you're working with as well. Again, going back to those nationals, if you're not doing business between Monday to Friday, 9 to 5, you're not going to get in touch with your lender at all. When push comes to shove, most of the stuff that you need to do should be able to be done in those business hours. But I can tell the audience right now that I've worked with David for many years, and if I need to, not that I want to, get in touch with you Saturday at 7 p.m., you'll answer my texts. And you will say, yes, this requires me to get involved right now, and you'll jump in if you need to. Or you will say, 7 p.m. on Saturday, trying to calm down me and my client, no, we can really deal with this on Monday at 10 a.m. And that's the difference. Anybody can provide you a loan, and those rates are going to essentially be about the same. But what I believe almost nobody else can do is give the clients the attention that you can. So if you don't mind, anything else we should add about why cross-country is different than the others? And then I want to jump into some scenarios about real-world things that you and I are working on right now or have recently completed, so that people get a sense of there are different types of mortgages out there.
Absolutely. So first off, there is always a personality fit. So I can't say I'll be the right lender for everyone. There's other great lenders out there. It's just we all do things a little bit differently. So I want to give you guys another comparison how I did the lawyer and judge earlier. When you guys file your taxes, some people, if you have many businesses or you have a complicated business that has a lot of expenses, a lot of paperwork, you might not go to like a TurboTax, right? They are the quickest, but does the quickest always mean the best, right? A lot of people hire CPAs, right? Which I consider myself a specialized loan originator. I specialize in more complicated deals than just straight W-2 files. Of course, we do those highly efficiently, but a lot of clients here in Miami are self-employed or business owners. So probably over half of the deals we deal with on a daily basis are people that are self-employed. So we learn how to really specialize in those deals, which sometimes an app can't do. So an app may ask you, how much money did you make? You may say that you made $50,000, but is that what you ended up reporting on your tax return after taking away all the expenses? So sometimes the fastest isn't always the best, right? You don't want to go to the fastest surgeon, right? Heart transplant in 20 minutes, right? It's not always about speed, is what I try to tell my clients.
So what you're also saying is if you have a W-2, almost everybody can handle a W-2.
Absolutely.
But when you go beyond a W-2, or you have some other somewhat complicated financial situation, most of the big boys out there are going to start to fail in some way, shape, or form, where that is really where you start to shine, right?
Yes.
So I'm looking out to see if there are any questions directly, but in the meantime, what I want to do is talk to you about some real world examples, because as you see an ad out there that says, listen, I can get you a mortgage at, I'll make up a number, 2.9%. You can't believe that, because that ad has no idea who you are, what your financial status is, what your income is, what your debts are, et cetera. And so when somebody comes to apply, you really have to educate them and give them a real world basis on how that loan is going to work for them, correct? All right.
Absolutely.
So for example, and I'm going to try to just genericize as best we can, but I'm sure you're going to know who we're talking about. There are two brothers who are currently looking to purchase a home. And one of the brothers is out of state, the other one is here, and eventually they're going to share the home together. The one that is already here has a business and recently took out a loan to start his business here. And the other brother refinanced a home outside of state. And they come to you and say, listen, Hal has found us a great house, and we're ready to do our mortgage. How do you start with that? Because that is not your typical first-time home buyer with a very simple picture. It's a complicated one.
Yeah. So great question. The first thing I do is I just ask them all about themselves. Tell me about your situation. Before I even explain the loan process to them, I have to hear, where they work, how many properties they own, their credit score, the amount of money they have saved up. I have to know basically like a snapshot of their financial history. And then based off that, then we could start. So in this example, even if, let's say, one of the brothers makes a good amount of income, if he is self-employed and he doesn't have 2 years of employment history, then of being self-employed, then he won't be able to use his income for the loan, because it's not only about how much you make. If you are a self-employed business owner, you also have to show stability of income. So you have to show that that business has been successful for at least 2 years is what they look for. So that's another thing. If you go to an app, they're just going to ask you maybe how much money do you make and not ask those extra questions. They will eventually, but it's not going to be upfront. And we're going to do that upfront.
Got it. And so let's say that you've got a complicated situation like that.
Mm-hmm.
In other cases, we have a more simplified person applying for a loan, but then as they're in their contract, things come up. Mm-hmm. So I'll give you another example, somebody that we just finished working with. A moderately priced home, somewhere around $450,000 is the purchase price, if I remember correctly. He and she had steady jobs, but did need to go through some hurdles regarding the property itself. So again, you're the loan branch manager, loan officer at Cross Country. You turn over the personal information about the buyer first, and that's what qualifies them for a particular type of loan. But what we haven't really discussed, and I think that the audience should understand this, is that's only half the picture, right? You don't say, hey, I'm a great person, give me my money, and it ends up at the closing table. Mm-hmm. The other half of the equation is the property a worthwhile investment based on the purchase price that's on the contract for your cross-country mortgage institution to provide them that money. So let's say on that $450,000 property, the appraisal came in at $425,000. Mm-hmm. Why does that change the picture? I don't think a lot of people out there, especially first-time home buyers, understand how big a problem that low appraisal can be.
So that could be a huge problem, and we're seeing that now, honestly, more than ever right now, because there is such a tight inventory problem that people are bidding against other buyers to acquire properties, and we're getting a lot of contracts with people willing to pay way over the appraised value of the house. So when you guys get a loan with us, one of the things we have to do is an appraisal as collateral to see what the property's worth. So it does not matter what you sign the contract for. We also have to make sure it's worth some, at least that, maybe hopefully a little bit more. So when a property doesn't appraise, but let's say the purchase price was $450, and we're not going to get too numbery here, but if it's $450 and it only appraises for $420, we need the client to put 5% down of the $420,000 plus then cover the difference from $420 to $450 in all cash, or you may have to renegotiate with the seller to get a lower purchase price. We cannot still let you only put 5% down because now the property did not appraise. So if you want to still only put 5% down, you're going to have to lower that price from $450 all the way down to $420.
Got it.
Which, sometimes is a deal killer.
Oh, for sure. There's a lot of hurdles that people don't necessarily think about as they're entering into the home buying process in general. And you were talking about a $450 purchase price, it appraises at $420. There's a $30,000 gap that they would have to come up with in cash. Yes. You mentioned cash. And I'm going to even emphasize that further, because you can't just go to your dad and say, give me $30,000, right? You can't do that. Or can you, for that difference?
If it's family, you can't have family gift you funds. It has to be immediate family.
Okay. How about your best friend who's very, very wealthy? Hey, give me $30,000. I really need that to gap the difference between the appraisal and the purchase price. And I know you're good for it, right? Does that work?
You know what? Actually, now it does.
Really? Oh, this is
Thanks to social media, though. So this is a little bit different.
okay.
If it truly is a lifelong best friend, they will make you document with photos. They'll go to Facebook. They'll go to Instagram. So underwriters now look at more than just documents. They'll actually make you provide proof that you guys have a long, lasting relationship.
This is actually news to me, and I'm actually excited. I don't know if you saw it in my face when you just said that.
Yeah.
Tell me where cash doesn't work. Like, hey, I have to get $30,000. David, where can't I get the $30,000? Maybe that's a better way to ask the question.
So from like sometimes second or third cousins, aunt and uncles, sister-in-law, brother-in-laws, things like that. Should be more immediate family or long life friend.
Okay. And very briefly, why? If I've got $30,000 in cash, I'm ready to put it on the table. Why does the lender care where it came from?
Okay, so great question. With FHA and conventional, there's money laundering laws because FHA is backed by the government. So they scrutinize all the bank statements and make sure that the money is your money or it could be sourced. Every dollar that you use in a transaction has to be sourced from a bank account. You cannot just give a cash deposit. That is just one of their rules that they've had for a few years. So to elaborate on that a little bit more, a gift, right? So why should a gift come from an immediate family member? Because if it's an immediate family member, you may not have to pay back that money and it's actually a gift. They're going to make, let's say your father gives you $30,000, they will make him sign a letter that says he expects to have no repayment of this $30,000. It truly is a gift because you cannot get a loan in order to put that money in, for down payment. Because then technically it's not even equity. It's just a loan on a loan. So it has to truly be either your own money or a gift that's not expected to be repaid back. So when you start talking about third cousins, family, friends, there is a chance that they may want you to pay them back in the future. So that's why they try to keep it, for the most part, to immediate family.
Got it. So besides the brief examples we've kind of done already, let's please explore some of the things that happen relatively often during a loan process that become hurdles that you need to step over. I think we are talking a little bit about appraisal, but there are other things as well. So what are some of the common things that come up during a loan process that people in general should know about?
The first thing is definitely being upfront with me about anything you may own, because at one point, the underwriter is going to find it. They're going to run background checks. So if you guys own properties in different states, even if you don't tell me there's no mortgage on the property, you co-own it with someone else, believe me, they're still going to find it. So our job is to structure everything up front to make sure you close on time. So if we go to that underwriter saying you own no properties and it comes back that you own 3 properties cash in a different state, they're going to turn back the file and they're going to ask for a lot more documents. And we might not be on their good side since we weren't upfront with it. So again, just like a lawyer, present everything to me up front so I could give you the strongest case and represent it properly to the underwriter.
Okay. So be honest.
Be honest is definitely the main thing.
Appraisal. I want to go into this, but maybe not dive too deep. I don't think that many people looking to borrow money understand how the appraisal process works and who orders it and why it's ordered the way that it is and how long that process typically takes.
Great
so
question.
I'll start off and then you'll take us through the rest of the process. Yep. At some point during the purchase process, so you get a contract for the house. The first thing as a buyer that your agent is going to walk you through is making sure that you have a house that's properly inspected. There aren't surprise things with the house before you proceed with the loan because each of these steps require the buyer to spend some money. Hey, it's going to cost you X amount of dollars to get an inspection done. If that inspection turns up that there's potentially termites, it might be a secondary inspection for termites that will cost you another amount of money. So once you're satisfied with inspections, then the bank is going to say, hey, it's time for us to get the property appraised. Remember, the first half is whether or not you are qualified for the loan. The second part of the equation is whether or not the house is worthy of that purchase price so that you can move forward, right?
And for the property itself to approve.
Yeah. So you walk us through what the appraisal process is when it's time to order the appraisal and who's involved there.
Yeah. So when we order an appraisal, one question I get a lot is, I know an appraiser, old buddy of mine that I went to high school with. Can he be the appraiser on the loan? The answer is no. So there's conflict of interest that we cannot pick the exact appraiser. We have companies that we work with that may have, for example, 30 different appraisers. So when it's time to order an appraisal, we submit a request, it goes to the company, and it gets assigned to one of these 30 or 40 appraisers that they have.
Essentially a random process.
A random process.
You send it external. Yep. Hey, I need an appraisal done.
Mm-hmm.
You can never be blamed or looked at for inappropriately doing the appraisal.
Influencing the value of the property.
Yeah. So you order this from another company, mm-hmm. which can take a full day, right?
Yes.
Then that company has to assign it to an appraiser,
mm-hmm.
which are essentially independent contractors, correct?
Yes.
So how long does that take?
So that may take about another day or so. Now it could take up to even 3 days due to the market. So many people are buying homes right now, and there's only so many appraisers out there that they cannot do more than, let's say, 2 or 3 jobs in a day sometimes, right? So it may take them 2 or 3 days to call back potential new mm-hmm. Properties because they just have too much on their plate. Right. So right now, an appraisal is taking about a week and a half to 2 weeks. It used to take about a week. And this also varies a lot based on where the property you're going to buy is located. Because if it's in a small county up in Florida, there may not be as many appraisers there, so it could take longer. Right. So in Miami-Dade, it's normally a lot quicker.
So you order the appraisal from the appraisal company. Mm-hmm. They assign an appraiser. Mm-hmm. The appraiser then has to coordinate with the seller and the agents involved to get access to the property and go out there, right? And even when they go out there and do their work, which sometimes is about half an hour to 45 minutes worth of work on a typical home, then they have to go and write up a report. How long does that take?
So that honestly depends on the appraiser. But normally I see maybe between 2 to 4 days after they actually go out and inspect the property is when the report will be ready for download. Because a report is about 30 to 40 pages. It's not just one page that says the value. They have to find their comparables.
Right.
So one thing is the appraisal is just, getting the condition of the house, making a bunch of notes. And then after that, they're going to go and search for past closed sales in the last, hopefully 90 days to 120 days, and then adjust those properties to see what your property right now should be worth, your subject property.
Got it. So they then turn in a report, not to you directly, but back to the appraisal company, right?
For a second review and then back to me.
Okay. Mm-hmm. Then it comes to you. How quickly can you act on the result of that appraisal?
Normally the same day, but each appraisal is different. So there may be an appraisal subject to some repairs. So one of the first things I do is, great, I see it may be the value, it came in at value, but it may say that the roof is damaged. That may have to be repaired. The water wasn't running. There's bars on the windows that have to be removed. Normally, it's the property is okay, but you always have to check the comments and see if there's something that needs to be done. So it could be valued at $450K contingent on A, B, and C to be done.
Okay. So this is excellent. You walked right into my next question. It can come back with conditions. Hey, mm-hmm. This is appraised, but these things need to be corrected. Typically, those things are what we call deficiencies on a 4-point inspection. The 4-point inspection are the major structures of the home. And if you could briefly go over them, because I know the number one thing would be roofing, right? You mentioned that. What other typical things could stop the loan process from forwarding after the appraisal has been completed?
Yeah. So to back up a step, the inspections, the 4-point, we never look at. That only goes to the insurance company. So what we care about is that the house is fully insured. Now, the appraiser is going to go do another inspection, which is different than the home inspection you do, and just going to make sure that the roof, there's no illegal additions, illegal plumbing, the water's running, electricity's working. Those are the main things they're going to look for, and AC.
Got it.
But other issues that could occur is, let's say that the appraisal is done, right? So appraisal's good, everything's good to go. It just goes back, honestly, to just being honest up front, right? So besides owning other properties, we've had cases of, one of the things we have to ask is, do you pay any alimony or child support? It's one of the declarations we have to ask when we do the application.
Sure.
If you say no and they end up finding an old court decree that says you have to pay, they see it in your bank statement, so you're making consecutive monthly payments to the same person, they're going to catch on. They're going to catch on that, and they're going to put it to a halt and make sure you still qualify. So it really just comes up to just getting everything up front. That's the main thing that I see that doesn't, kills a file.
So I actually mischaracterized a little bit when we're talking about after appraisal, what things do you typically see that can cause problems? And one of them was the roof. And you said, no, it's actually not us that are looking at the 4-point. It's the inspection company and then getting insurance.
That's what, yeah.
But insurance, in my mind, is essentially the roadblock, right? So when you go out to purchase a home, on closing day, the lender, you guys cross country, are going to require that the buyer who would own it on closing day have insurance. The reason for that is A, the homeowner should have insurance, but B, you guys have now lent the majority share of the money for the purchase of that home, and you're not going to allow that to happen if there's no insurance. God forbid on the first day there's a fire that runs through and the house is destroyed, and you've got a loan basically with no underlying asset to protect it. So the insurance actually, you don't get to see the details of the inspection report or the 4-point inspection, but the insurance, whether or not the person can get it or not, clearly indicates whether or not there's a problem with the house. Is that a more fair way to characterize?
Yes, definitely.
Okay.
We just want to make sure we're fully insured, and that's basically all we look at. We don't go into the reports like you mentioned.
Right. So with other lenders who clients of mine have used, they can't get insurance, and the lender basically doesn't assist at all. They're like, that's it. You're done. That's not the case with you. And you and I have had a number of cases over the years where you have assisted, you haven't fixed directly, but you've assisted buyers in continuing to chase after and get their dream home. Talk to me about what satisfaction you get from that and how you approach that.
For me, there's sometimes people that get discouraged because you may have gone to a lender or one or two lenders, and they told you, no, you don't qualify, or you send documents and they don't even get back to you. So my job is, sometimes people aren't ready to buy right away, and that's okay, right? But if I could make a plan for you to buy a year from now and tell you what you need to do in order to qualify, I'm going to make you a loyal client. You're going to trust me, and we're going to build a relationship that you'll come back to me once it's time to buy. So all I could do is, I'm going to hear your situation and give you the best advice that I think would work to help you get approved in the future. Maybe it's raising your credit score 20 points, and I'll show you what you should do to raise the credit score. Some people actually come to us and they really want to get approved, that they'll go ahead and they'll basically pay everything off, all their cards, and then come to me and say, hey, I paid everything off to see if I get qualified. Don't do that, because you could come to me and I could tell you, hey, maybe you're already qualified. You don't need to pay any of that off, or you may still not qualify. So I could always qualify you contingent on paying off certain debts, right? So for me, it's having you get into a house without spending as much money as some other people may have told you, right? I try to do it the most efficient way possible. So provide you with the best rate, low closing cost, and make sure you close on time, and just a smooth closing, which is maybe getting some documents up front, but knowing that you're not going to have problems in the future.
Got it. And David, as we were preparing for today, you said I could talk about mortgages and the process forever. Unfortunately,
that's a little boring.
We don't have forever.
Yeah.
And I do want to kind of wrap things up. So is there anything that a potential buyer should really be focusing on before they come see you? Is there something that we haven't touched upon that is a big topic that they should be aware of before they go out to get a mortgage?
One big topic, and this isn't really for first-time home buyers, it's people buying their second home, is forbearance options out there right now when you're getting a loan. So all mortgage servicers right now and lenders do need to provide forbearance options due to COVID issues. So when they offer forbearance, you're only supposed to take it if you truly are having issues and you can't pay your mortgage. We're having a lot of people that are coming to us to get pre-qualified and may have, already own another home and are buying a second one, or maybe doing a refinance. But if you're currently in forbearance, you're telling your current mortgage servicer that you're having trouble paying your mortgage. So you can't say that and then come to us wanting to get a second mortgage when you're saying you're having trouble paying your first mortgage. So one of the biggest things is only take the forbearance option if you truly need it. Because at the end of those 3 months, they're going to make you pay those 3 months in one large lump sum, which is then sometimes a shocker to people. And then when you can't do that because you spent the money elsewhere, they're going to make you roll on those 3 months at the end of the loan and defer it, which may not look that great for you. So I would say just only take that option if you really need it. You will see it's available to you because we have to provide it available to everyone, but really only take it if you truly, truly need it and can't make the payment. And another thing I wanted to say is with just how long things take right now. So imagine like it's Christmas, right? You order these brand new pair of shoes that you love. You order on the 23rd. So is everyone else, right? So when everyone's ordering something at the same time, it's going to take longer to get that end result, that pair of shoes.
Sure.
So when rates are so low and we have more refinance applications than we've ever had, people are purchasing like crazy. To close in 3 weeks now is a lot tougher. And we've tripled our staff in the last year. But there's just so many loans out there that we can't get to all of them, right, in a 2 or 3 week time frame. So be prepared that it is going to take closer to 45 days now to close a home loan, just due to how many loan applications are out there and everyone's trying to borrow at the same time.
Got it. David, I can tell you in all honesty that if one of my clients needs to borrow money in order to purchase that dream home, you are their superhero. You are truly a superhero to many people that I know. And for those of you that are out there that are looking, if you need a superhero, David, tell them how they can get in touch with you quickly.
Yep. So you can reach me. My cell is 305-333-8432. And my email is ddemarchena@myccmortgage.com, which is very long, but we'll go ahead and we'll put it there for you in the bottom, and I'll put it in the comments. And one more thing I wanted to say,
Sure.
Hal, is when you guys come to me, it's a free consultation. We don't charge a penny unless we close. So I could be working with you for 2 or 3 months, give you a bunch of different options. We go under contract. The property doesn't close. I am not going to charge you $1. So there's really nothing to lose. Even if you're thinking of buying a year from now, let's just have a quick phone call and see where you stand now to make sure you're ready to buy when that time comes.
Got it. And again, for all you out there, loans may look the same, but they are not the same. If you want some real personal attention, David's a great guy to get in touch with. Check him out. I'm not saying absolutely positively, but you got to check him out because personality does matter as well.
Does.
And for those of you that are interested in real estate, my show continues next week, same time. Actually, it'll be at 2 o'clock, which is our regular time. We were delayed this week. And next week, we're going to be talking about condos on Miami Beach. Until then, have happy real estate dreams, and let's go get them with David's money.